This is the High Voltage Business Builders Podcast, daily intelligence for serious e-commerce portfolio builders across Amazon, TikTok Shop, Shopify, Walmart, and every channel that moves the needle. Neil Twa and his Voltage team all day, every day since 2012. Let's get into it.
Thursday, June 4th. Episode 288 of the High Voltage Business Builders Podcast. On behalf of myself and the entire team at Voltage, we are genuinely glad you are here today. Here is what brought this episode to the front of the list. A seller I spoke with recently, doing somewhere around $40,000 a month across Amazon and their own site, told me their supplier just put them on a price hold watch list. Not because they missed a payment, because Amazon kept repricing their product below MAP and the supplier blamed them for it. That is where we are right now. Amazon's pricing engine is creating friction that travels all the way back up the supply chain. And if you are not thinking about that, it will cost you. Look, Amazon's pricing algorithm does not care about your supplier agreement. It does not care about your MAP policy. It does not care that you spent 6 months building a relationship with a factory in Vietnam or a distributor in Ohio. All it cares about is the buy box, and it will move your price to win it, sometimes without you touching a thing. Here is what actually happens. Amazon sees a competing offer at a lower price, sometimes from one of your own wholesale accounts, sometimes from a hijacker, sometimes from their own first-party inventory. Their system adjusts, your price drops, your supplier's retail accounts see it, and suddenly you are the problem. I have watched this play out with sellers doing $5,000 a month and sellers doing $500,000 a month. The mechanics are the same. The stakes just get bigger. For a seller at the lower end, this might mean one angry email from a distributor and a warning. For a seller doing real volume, this can mean a supplier pulling your account entirely. I have seen it happen, not a threat, a fact. And here's the thing that frustrates me most. Most sellers treat supplier relationships like a transaction. Place order, pay invoice, repeat. They do not invest in the relationship until something breaks. Then they are scrambling to explain a pricing situation they barely understand themselves. The reality is, your supplier needs to trust that you are not the one blowing up their channel. If you can demonstrate that, you actually have use most sellers never use. Pricing documentation, Amazon policy context, a clear explanation of how algorithmic repricing works. These are tools. Use them. You are not just a buyer. You are a channel partner. Act like one. Let me give you 2 real situations I have seen up close. First one, a seller in the home goods category doing about $25,000 a month on Amazon, also selling through a regional chain of specialty stores. Amazon's algorithm matched a third-party offer and dropped their product price by 18% overnight. The regional chain saw it, called the supplier, and said the brand was undermining their retail price. The supplier panicked and put the seller on a 30-day probation, threatening to pull net 60 terms. The seller came to me saying, "I didn't do anything," and technically that was true. But they had no documentation, no MAP enforcement record, no communication with the supplier about how Amazon pricing works, nothing. So they looked guilty by default. We helped them put together a 2-page channel integrity summary, showed the supplier exactly what happened, pulled Amazon's pricing history, explained the algorithm in plain language. The supplier had never seen that before. Literally said, "I didn't know Amazon could do that automatically." Probation lifted, terms restored. And now that seller has a quarterly check-in call with their supplier rep. Relationship is stronger than before the incident. Second situation, a seller doing closer to $80,000 a month, multiple SKUs, 2 major suppliers. One supplier started shorting their orders by 20% every cycle. No explanation, just less inventory. Turned out the supplier was quietly redirecting stock to a competitor who was selling at a higher price point and not triggering algorithmic repricing on Amazon. The fix there was not confrontational. It was contractual. We helped them negotiate a first allocation clause tied to minimum order commitments, locked in priority access before the supplier could divert. Took one conversation and a slightly larger PO to get it done. Same pressure, 2 different problems, 2 different solutions. but both started with understanding that Amazon's pricing behavior has consequences that extend far beyond your listing.
Are you AI ready in your business? AI only multiplies the foundation you've already built. Don't 10x garbage into your business. 10x your profit. Score your gaps in 60 seconds. Find out how ready you are. Visit voltagedm.com/AI quiz and take the free readiness quiz. And now, back to the podcast.
3 moves. These work whether you're doing $5,000 a month or $500,000 a month. Move 1. Document everything Amazon does to your pricing. I know nobody wants to maintain a spreadsheet. Do it anyway. Every time Amazon adjusts your price outside your set range, log it. Date, A-sign, what triggered it if you can tell, how long it lasted. This is not busy work. This is your defense file when a supplier calls you and says you are violating MAP. You pull that document and you show them. Amazon moved the price, not you. That one sheet has saved supplier relationships I have personally seen go sideways. Move 2. Get on the phone with your key suppliers at least once a quarter. Not email, not a portal message, a call. Walk them through what Amazon's pricing environment actually looks like right now. Most suppliers, especially smaller ones, do not understand algorithmic repricing. They think someone at your company pushed a button. When you educate them, you shift from being a vendor to being a partner they want to protect. That is a completely different conversation when inventory gets tight. This one's boring. It's also where the money is. Move 3. Build inventory buffers that account for pricing volatility. When Amazon triggers a price war on one of your SKUs, your margins compress and your sell-through rate spikes. If you're running lean inventory because you are trying to optimize cash flow, that spike wipes you out and you go out of stock. Out of stock means ranking loss. Ranking loss means you are paying to rebuild from scratch. I have seen sellers lose 6 months of ranking gains in 2 weeks because they did not have a 45-day buffer on a high-velocity SKU during a price compression event. Build the buffer. Protect the rank. Protect the relationship. Those 3 things together are your actual strategy. If this episode hit close to home, that is intentional. The Amazon pricing machine is not going to slow down. Suppliers are going to keep reacting to what they see on the retail side, and sellers who do not have a plan for this are going to keep losing accounts, losing inventory priority, and losing margin they cannot get back. At Voltage, we have been helping sellers work through exactly these kinds of operator-level problems for 13 years. Not theory. Not a course where someone reads you a framework. Actual operator guidance from people who have built and run these businesses themselves. If you want the full system, the one that covers pricing strategy, supplier relationships, inventory planning, and how to build a brand that does not get held hostage by platform algorithms, the Almost Automated Income Blueprint is the place to start. It is $27. You get the FBA system, the AI blueprint, and the full bonus stack on one page. Instant access. Go to voltagedm.com's blueprint and grab it today. This is not a pitch to get you into a $10,000 program. It is a $27 document that gives you the operator framework we use with sellers at every level. Start there. See if it changes how you think about your business. And if it does, you will know where to find us. Thanks for spending part of your Thursday with us here on the High Voltage Business Builders podcast. New episode drops tomorrow. We will see you then. That's a wrap on today's episode. If you're trying to figure out where AI actually fits in your business and where to invest before bolting it on top, head over to voltagedm.com/AI quiz. 5 questions, 60 seconds, a personalized AI readiness score, and an instant foundation gap report. Built for operators, not AI tourists. We'll be back tomorrow with another edge. Until then, stay high voltage.